Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 31st of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's kick off with a look at the overnight changes and price moves to be aware of. Quite a quiet session in relative terms on the global foreign exchanges yesterday, but I will just flag a couple of key points. A bit of weakness reappearing in the Australian dollar against the US dollar, and the Aussie giving up around 0.19% against the US currency, and we'll look at some of the reasons for that momentarily. The Mexican peso also on the back foot yesterday against the US dollar, down by 0.32% against the greenback, and the Indian rupee following on in a similar fashion, down by just over 0.5% against the US currency. Dollar index for its part broadly unchanged overnight, but importantly back above that key 97 round number level. This area has been a failure point on a couple of previous occasions. Will it be so again, or will the dollar reassert itself above this latest round number? Let's have a look at that in due course. Just one other thing to point out before we move on. There was good strength from the dollar against the South African rand, which lost 0.43% against its US rival yesterday. Okay, what's on the calendar then? Events that may move the markets today. A pretty busy calendar, and we've already had quite a decent amount of data out of Asia Pacific. We've had CPI data from Australia for the third quarter, and we'll look at that in a bit more detail momentarily. We've also had manufacturing and non-manufacturing PMI data, official data this, out of China, and again we'll look at that in a bit more detail to come, as well as the decision and comment from the Bank of Japan and its October interest rate meeting. And once again, we'll look at that momentarily. To come then today, 7 a.m. GMT, we'll have retail sales data out of Germany for the month of September. That'll be followed by CPI data for October out of France at 7:45 GMT. And at 9 a.m., we'll have September unemployment data out of Italy, accompanied by ZEW survey expectations data for October out of Switzerland. Then at 10 a.m. we'll have Eurozone unemployment alongside CPI data from the Eurozone for the month of October. And then jumping over the Atlantic this afternoon, we'll have the gross domestic product data out of Canada for the month of August at 13:30. At 13:45 GMT, it's the turn of the Chicago Purchasing Managers Index for October. Again, that's an important US figure. Then at 17:15, SNB, Swiss National Bank Chairman Thomas Jordan, will speak in the first of the day's central banker outings, and he'll be followed onto the podium 3 hours later at 20:15 by the Bank of Canada's Governor Pollard, who'll be speaking then. 21:30 will see the release of the AIG Performance and Manufacturing Index for Australia for the month of October, and if you're still in the market at 23:50 tonight, you can see foreign bond and stock investment in Japan for the week of October 26th. Okay then, breaking news and comment that's caught my eye overnight. First of all then, the Bank of Japan has made no change to interest rates or to quantitative easing at its October meeting, but it did revise down some of its GDP and CPI forecasts for the nation, and that's probably not perceived to be good news, and rightly so. Meanwhile, speaking of disappointing news, China's official manufacturing PMI moved closer to contraction in October with a print of 50.2. Remember that contraction levels are 50 and below, and that was versus forecasts of 50.6. That's very interesting that it's the official data, which many believe can easily be massaged, that's showing these low prints rather than the Caixin unofficial survey data itself. So that's something to think about there. And staying in Asia Pacific, Australian Q3 inflation disappoints as it fails to show any fresh uplift in prices or demand in the local economy. And some commentators, such as myself, were hoping that the inflation numbers might show some sort of demand-led growth, particularly as the employment situation in Australia is tightening. Okay then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Some US equity indices closed back in the black for 2018 year-to-date last night. However, I think it's quite telling that broader benchmarks, such as the US 2000 index and the NYSE Composite Index, remain in negative territory for the year as a whole. And I believe there's more work to do if US stocks are to convince on the upside. And you can see the percentage performance changes here. Yes, the Dow was up by a fraction of a percent above the gain line. Similarly for the S&P, the US 2000 or the Russell 2000 index is down 1.9% year to date. The New York Stock Exchange Composite Index, a very broad measure, down by 5.3%. So as I say, plenty of work still to do for the US indices there. Okay, it's risk warning time. Please take a moment to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leverage products for you, then please do contact our Pepperstone account representatives and do take a moment, please, to read this risk warning thoroughly. Thank you for your time.